Rental rates are skying up in Denver, and occupancy is back to pre-recession levels throughout all product age groups and almost all submarkets. The Denver apartment market is humming along. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Denver update. The big story in Denver has been rent growth. Let's show you a list of markets with the biggest rent hikes over the past 6 months. No surprise to see all three of the Bay Area metros on this list, with San Jose and San Francisco light years from the rest of the world. Then Austin, Boston, Oakland, and Denver, 5.6% growth over the past 2 quarters. So how do we get there? Here's a chart showing quarterly same-store rent change by quarter in Denver, and you'll see that this isn't a new trend. Denver was actually one of the first markets to start posting solid rent hikes coming out of the downturn. Hit a lull in the winter months of 4Q10 and 1Q11, but then big growth in the past 6 months. Effective rents up 2.9% in 2Q and 2.7% in 3Q. And that brings year-over-year rent growth in Denver to 5.7%. That is the 10th best performance in the country, and it's also one of the larger hikes Denver has seen in the past decade outside of the second half of 2007. What makes these numbers especially encouraging is that these solid rent hikes are near universal throughout all product age groups and most submarkets. Let's look at annual rent change by age first. You see every product line is right around the 5 to 6% range, with the 2000s era niche slightly ahead of the pack at 6.3%. And among submarkets, 9 of 13 logged rent growth of 5% or more in the past year. The top performer was the Tech Center at 8.6%, followed by Littleton and South Aurora, and 4 more were just a hair under 7%: in-town Denver, South Denver, West Englewood, North Aurora, and Boulder. Only 2 submarkets posted annual rent growth below the 3% mark, so here are your laggards: Westminster and Arvada Golden. Okay, so rent growth overall excellent, and here are some occupancy numbers for you. Overall occupancy improved 0.2 points in 3Q, and it is up a 0.5 percentage point year over year. That brings overall occupancy to 95.2%, in line with the pre-recession levels seen in the second half of 2007. And this rate would be even higher if not for some softness still in the Aurora submarkets, where occupancy is still under 94%. Denver should continue to be one of the nation's top performing apartment markets in the year ahead. We're expecting occupancy to inch up a little bit more and for rent growth to get around the 6.5% mark in the year ahead. So for a lot more details on the Denver apartment market, mark your calendars for November 15th. We'll be talking a lot about Denver, as well as all the markets in the mountain region, the Texas Southwest region as well, at our Texas Southwest conference in the Dallas area on November 15th. For more details, go to mpfresearch.com. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.